Right. Well, this is your opportunity. There is much food for thought in what we've heard from our four speakers. I see a gentleman here. If you wait, we're going to microphone to you. And can I remind all speakers it'd be useful if you give us your name and the organisation?
Thank you, Richard Tether. Sorry for asking another question, but I couldn't resist challenging Professor Collier there. He said that tax avoidance is necessarily always rent-seeking. No. Well, by and large. So, I think that's only arguable if you take a very narrow view of what tax planning, tax avoidance does. A couple of other economic concepts. We know that businesses provide benefits far more than the tax that they pay. Yeah, the products that they're delivering and so on is generally far more important than the taxation. We also know that tax avoidance isn't done in a vacuum. You get tax avoidance on business profits, business activity, investment, and so on. And a third economic concept is that we know that if you tax something, you get less of it. Therefore, if you have high taxes, you get less investment, less business activity, and less of the other good benefits that businesses provide. And that's particularly the case in places like the Third World, where there is less, there's lower markets, there's less activity and less to attract businesses in there. So therefore, I'd argue, and I have argued for years, that tax avoidance, because it reduces the overall tax on a business, it promotes business activity, it promotes investment, and therefore it's not rent-seeking, it's not just sucking out of the economy, it's enabling all this other beneficial activity to take place. And isn't that something that you've missed from your analysis?
Okay, you've overlooked the fact that tax avoidance is a social good. Do you want to respond to that, Professor?
I imagine there'll be other comments of the same ilk, so why don't we build up a few?
Oh, okay. Will, do you want to come in on this?
So I have a whole list of things. Actually, I must just say one thing, because I can see two very, very good government people sitting in the front row. And HMT and HMRC actually are a very good organization. I spent 5 years in the US government quite a long time ago. I took a huge pay cut to do it. I did it because actually it was one of the most interesting jobs I ever had. I didn't do it because of the revolving door either. So, sure, I mean, some talent will follow, but also some inclination will lead you in one direction or another, and I think we should say that. Let me just go to this point. I run, amongst other things, a very small research group, and we produce academic papers with your colleague Mike Devereux. And we had a conference earlier this week, and we talked about 4 papers. 2 of them bear directly on this subject. One was about the 2008 changes made in Germany to the thin cap rules. And the other was about essentially the effects on initial investment of thin capitalization rules and transfer pricing documentation rules. And the latter paper showed convincingly that the tighter those rules are, tighter both of those sets of rules are, there is a drop-off in investment. And therefore there is a welfare effect. So there is a cost of tax. And to that extent, some element of tax avoidance, tax reduction, may bring in some benefits. What the other paper showed, the first one on the German changes to the rules, was that actually sufficient rules which are tight but not too tight, will raise tax revenue. And therefore what I would tell you, as I think most people would tell you in the end, is that there's a balance to be struck here. If there is a confiscatory rate of tax, or if there's even a 20% differential between one country and every other country, people are going to strain mightily to avoid that. On the other hand, do most companies feel that they shouldn't pay any tax? Noted I said most companies, clearly some do. But do most companies feel they shouldn't? No, absolutely not. So there's a balance to be struck here. And that's equally true for developing countries as it is for developed countries. I mean, there's this big question about tax incentives. Some tax incentives clearly work. Other tax incentives are pure deadwood. And what we need to do is to look at all of these things a lot more carefully and try and work out what works. But, characterizing one thing as being all bad, which is not what Paul was doing, I don't think, or characterizing the other side as being all bad, simply isn't right. There's a balance here between the two things.
Okay,
can I just...
go on.
Chaz Rajari, Head of Tax at ACC. I certainly let the 2 academics have fisticuffs over this later on, but can I just bring it back to the here and now in terms of the BEPS project? I think one thing that I have real difficulty with in terms of some of the papers coming out of the BEPS project is some of the very short timescale we're working to, I think, is unrealistic. We need to actually pan that out well beyond 2016 implementation. We need to look much further ahead to make sure that we get a proper answer. But what I would say is that there's, if you like, from the hybrid mismatch to kind of poach a thing from that, there's a mismatch going on in terms of the source residence proposals in the digital economy type consultation document. So I think there are a lot of areas where the BEPS project is trying to focus, but I'm just concerned it's not going to be able to do it in time. I think the US is going to be the biggest problem in terms of getting the answers sorted out by 2016, especially in terms of multilateral instrument. And I just really think we should be looking longer term than just 2016.
Okay, let's take a cluster of questions. So, sir, if we go to you, and then there's a lady behind you, just there.
Theo Wallace, retired. First of all, I'd just like to add to the point on the gentleman on the right was saying that on the whole, the caliber of tax administration by the UK tax authorities is very good. It's a very challenging job, but one of the big problems about automatic exchange of information within Europe is the level of tax administration quality in a lot of other countries, particularly in southern Europe, is of a completely lower order, so that you're liable to get a very uneven result if information is efficiently collected in this country and not efficiently passed to this country.
Okay, and then we just go to immediately behind you there, look.
Sarah Ludis, Law from May. I don't act for Apple, and I'm not a US tax advisor, but I would like to defend them a little bit. I mean, to suggest there's no economic benefit in them returning cash, which, as Will very eloquently explained, is trapped offshore because of the way the US tax regime works. Instead of them just sitting on that cash pile, what they're doing is creating a system where they can return that cash to shareholders so it can become economically productive. So I think it is a little bit naive to suggest that what they're doing has no economic benefit.
Right, okay. I'm just wondering why they wouldn't just pay a dividend if it wasn't... Anyway, okay, right. Colleagues, we have 2 or 3 points here. Chaz dragging us back to BEPS, as it were. We've got issues about if we're going to have automatic disclosure across the entire EU. We've got differential standards of tax administration, and then some points about Apple's position and the real economic benefit there. Sharon, can I go to you first?
Yes. Well, OK, I'll start with the European one. So our data in the UK is better than that you might get out. But if you don't exchange the information at all, then the chances are of actually getting some tax that perhaps is sort of in Spain that should be here goes away. So something is better than nothing. So actually it's a step forward, and of course what does happen as soon as you start to get the exchange of information, then you can start to get the comparisons and the analysis of where it is falling down, and hopefully upgrade those countries that are not doing it so well. But without exchange of information, you recover no tax. With exchange of imperfect information, you get tax. And the fact that our information is better doesn't mean we're losing anything. So we're gaining what we gain from, say, the Spanish information, and we're not losing anything by giving it. So I think everybody ultimately, hopefully, will converge with a little bit of bullying along the way from, MEPs that complain and push the Commission to do something. On tight time frames, I know all about tight time frames, so I don't see why other people shouldn't have them sometimes. But data collection and encouraging data collection often needs a tight time frame that then you allow it to slip a bit. If you come out with saying, well, OK, let us know by 2020, people won't start doing anything till 2019. So one always starts tight when one's doing a negotiation. I want to go back very slightly to this sort of tax avoidance. I mean, I think the point is it's not tax planning, it's the synthetic tax avoidance, where you have operations done solely to avoid tax and that distort from the economic reality. I mean, that's getting back to what it's all about, and that's what you cannot justify. And, you know, and I would have a poke here at some of the things that go on in licensing and royalties, especially calling things IP when they don't deserve that name at all. And remember that I'm a European patent attorney by profession, so I slightly know what I might be talking about there. And so, you know, those kinds of tricks that really are just hoodwinking, then, you know, those have to be stopped. And I think that, you know, that's the kind of thing that you need to stop through, you know, the aggressive tax planning, which of course the UK is already addressing and which we are starting to address in Europe, because, and it will go on whilst there is, you know, austerity around. And if you look at the national debt of this country and many other countries, there's going to be squeeze on tax, and anybody that is caught cheating, because the public will see it as cheating even if it's avoiding, is just going to find that they have very high reputational damage.
Okay. Achim, may I bring you in next? And I wonder if I can bring you, if you will, to comment particularly on Chaz's challenges in terms of that timetable, the practicality of some of those issues in BEPS.
Fair enough. First of all, fair enough. I mean, the timelines are extremely ambitious. There's no kidding. I mean, we see this just as much because we also have to work to these timelines and generate these papers on which we then ask you to comment and sort of the production of these and taking into account. Certainly, when I joined the OECD, I was kind of expecting a slightly more leisurely pace, and so it was a lifestyle choice. Probably the wrong move, and I should be going back in the private sector. But I think what is important is, and I think you've just said that, there is a political dimension to this. You have a global project at a G20 and an OECD level. Those come with timelines. I guess political expectations are not necessarily framed within the frameworks within which some of our organizations may have worked in the past. And so I think some of these timelines are a reality. Having said that, I don't think we are going to do things where we're not convinced that we're delivering technically accurate solutions. If I also see in a small sideline, I have responsibility for the global automatic exchange standard that you're certainly familiar with developing and that G20 has endorsed in February. And if you look at that, we took about a year. We built off something not very popular, but nevertheless out there, FATCA, and translated that in a multilateral standard. And we hope to deliver the full package, including a commentary to the G20 in September. Those are the timelines of a year, 2 years we hope to be able to do in the area of automatic exchange of information. Having said that, and that's why perhaps this is also relevant, we would fully expect that we deliver this standard, but this is an evolving system. So we're not done. It's not that in 2 years' time I can hang my hat and we're just done with because we got one rule and you just go implement and Will lives in a happy world of stability. We hope it will be a much higher world of stability, but there's a clear recognition that it won't be over. Even in some of the actions you see, they commence towards the end of 2015.
Okay. Yes, sir. Wait for the microphone if you don't mind. Second? Yeah.
Jeremy Mindale, Primondale Limited. This is really to Dr. Achim Pross. Wouldn't the system work better if you're going to have exchange of information, and we've talked about mutually agreed procedures where you're trying to split the tax between two countries, say on a transfer pricing issue, if you had some sort of clearinghouse at the top, not based on the EU for goodness sake, but a clearinghouse set up by the G20 or something where tax authorities could at least register some of the changes of information and also the mutually agreed procedures to make sure that companies can operate within a system where tax disputes are resolved within a reasonable period of time.
Fair point. I think, you know, in the global space, and if you look at, and I guess we've heard this, what are the new markets, what are some of the countries where you need to go, those are very often not in traditional OECD countries or EU countries for that matter, so we got to be broader. And so you're talking about the BRICS and you're talking about the beyond BRICS. And clearly this is some of the, as many of you can testify, the places where dispute resolution, MAP procedures, the absence of arbitration is a key problem. That is why there is an action in there about dispute resolution, and that is also why certainly there's reflection. If you were to have a multilateral instrument, could you have something in that instrument that helps you to accelerate those procedures, whether they're better mapped, whether in an ideal scenario, certainly from the Secretariat's perspective and the OECD, we've always been promoting mandatory arbitration. There's a bit of a mixed result so far of the integration of that in the bilateral conventions. The uptake could certainly be better, but that's the direction in which we were driving this. And so if you are contemplating this multilateral instrument, and a couple of people here in the room I think are helping us put this together, then that may have a facility that allows you to have better and hopefully faster dispute resolution mechanisms.
Paul, I think you want to comment on that as well.
Yeah, I mean, transfer pricing is a big deal for the poorest countries. And yet the poorest countries, the business structure is often pretty simple. And so it seems to me it's an area where it's reasonably, the sensible solution is to have a centralized resource, basically. It's probably based in the OECD, which would adjudicate on transfer pricing matters, try and track international commodity prices, for example. I mean, to give you an example, in oil, the government of Norway has a whole team which tracks minute by minute what oil prices are, and so it tells the oil companies operating in Norway what the oil price they've got to use. When you go to some little African country, it can't possibly do that. But the same resources being taken out of 10 or 20 African countries, it's sensible to provide a centralized capacity for that sort of thing at the OECD.
Okay, right, let's try and take some more questions. And then we can come back in. Yes, there are two over here.
Thank you. Stephen Herring, hopefully still at the Institute of Directors. If I could ask what's the closest I think I can ever get to an ethical question on tax, that the comment's been made about how we're going to approach this through the BEPS initiative and the amendments to corporation tax. Now, I think that I can see why we tax employees, why we tax directors, why we tax investors. I think that consumers have had a difficulty not understanding why sales don't automatically turn into a taxation liability. A lot of the press criticism has been about a level of turnover not producing a level of profits. Now we have, at the moment, with tax transparent entities such as partnerships and LLPs that are ignored for tax purposes. We have certain other entities, such as the REIT structures, which are required to make distributions but pay no corporation tax. Surely if we want to get more ethical, we should look at removing corporation tax entirely, because it's just on an intermediate entity. Now, it always causes amusement, that, but the fact of the matter is, if you look at, we're halfway there now, because if you go back 15 years ago, the percentage of tax raised by corporate tax has been roughly halved. Well, let's just accelerate the next 15 years and look to remove taxing what's going to be an increasingly complex operation.
Okay, the panelists are preparing their answers to that. I can sense it. Let's take this question behind you before we take some answers. Yes, sir.
Steve Newcomb, HSBC. I wasn't really following on from the last question, but in terms of the debate about social usefulness of tax, how socially useful is the cost of tax compliance, and what effect might BEPS have on that cost?
Okay, I know there's a question behind you. Let's take these two questions first. And if we can do it in a sort of crisp, succinct fashion, I can get other questions in. Paul, do you want to go first?
Yeah. Okay. Should we remove corporation tax? I mean, there's some quite good theoretical reasons for doing just that and shifting to income tax. You know? It's not going to happen, is it? And so it's in practical terms, it seems to me just a distraction, right? We should be better focused on just removing the abuses that come from different national tax systems, rather than trying to construct some theoretical ideal, which of course doesn't exist. I mean, all tax systems create distortions, right? The distortions are part of the cost, as is the whole cost of tax compliance. They're part of the cost of providing public goods. Now, we don't want to live in societies that don't provide public goods. And one public good is redistribution towards the poor, and the others are things that we all use, right? A livable modern society has a very high level of provision of public goods. And we don't want, as a society, to walk away from that. And so we have to live with a certain level of tax distortion. Now, we should reduce that tax distortion to a minimum and reduce the cost of tax compliance to a minimum, certainly. But critiques of tax which say it's distortionary, we could have more investment, just completely miss the point that its basic function is to pay for all the public goods we want and need.
I can turn to you, and I want to get that last question in if I can.
Sure. Very brief, just I guess on the first point, we were chuckling a little bit because we thought about, well, it's basically taking the money out of the bank so it doesn't get robbed. But I think that's certainly one way of going about it. But I think I would agree just there is very sound economic arguments being made about the corporate income tax and whether it's a sensible tax. And we've done some studies on its growth enhancing potential and what other taxes might be better for growth and completely outside the BEPS area. But as a reality, I think that they're here. They're here for a while for a whole host of reasons. Speaking briefly as a German, the contribution for corporate income tax is overall 2% of overall revenue, so it's very, very minor. Is it going to go away? It probably isn't. A quick point, I guess, on the transfer pricing on the developing countries. I think a lot of what we're seeing on the ground, because we have some work with tax inspectors without borders where we build capacity, funded also partially by DFID here, is a lot of what we need to do there is not even changing the rules. It's making them work. It's having the people on the ground that can apply them. And perhaps as we go somewhat more complicated in the transfer pricing rules for sophisticated economies in the area of intangible properties where we need to do that, we also need to go simple so that those rules in these relatively simple business model can actually be practically applied.
Yes, can I just make a very
Okay, Will, yes.
Just a very quick point on that first one as a corporate taxpayer. This again is one of these areas where the pure economics might tell you one thing, the practicality tells you something different. And as businesses, in the end, we have to live, survive, and flourish in the societies in which we are. And if they've made a decision, the corporation should pay tax, then we have to live with that. We might have arguments about the amount of tax, but in the end, there is, at some level, an idea that everybody should be contributing. And corporations, yes, they're legal fictions, and yes, we have all sorts of, there are all sorts of pass-throughs these days. But at some level, if what it takes for people, ordinary people, for individuals to have faith in the tax system is the idea that corporations also have to pay some tax, then that's a price we ought to pay.
Okay. In fact, I'm just going to try and squeeze in this last questioner. So I think right at the back on my left, short and sharp, if you don't mind.
Sandy Bogle, Head of Tax at Mayor Brown. My question for the panel is, Dr. Pross mentioned earlier about the political process involved with the BEPS initiative. And given the sort of stalemate in the domestic political process in the US, I'd be interested in the panel's comments on whether or not the inability to get meaningful tax reform in the US, whether that will affect both the outputs for the BEPS initiative and the effectiveness of any of those outputs.
Okay, Sharon, I interrupted you, so we can have a sentence, please, colleagues. Would you like to do that one? And the point you were going to make before I interrupt you?
Well, I think if we don't get something through the OECD, it's quite likely that the EU might step in, and then it might be able to pressurise the US. TTIP springs to my mind. On the point about away from, taxing companies, I mean, you could go into all kinds of things about legal entities and personalities. Yes, you should probably put it all on VAT, but there has to just be a political balance in what you do. Somebody mentioned the cost of tax compliance. I mean, the cost of compliance with all kinds of regulations is huge. And if you're thinking that tax compliance is expensive, think about the banks in Europe that are going through the asset quality review. The fees that some of those are paying to the private firms that are helping them is 25% of profits, and on top of that they've got some 25% of their staff organised in trying to produce the figures. So think on that for an overhead. I haven't heard anything that bad before.
Okay, right. I think room for one more contribution from the panel. Okay, one there, Will.
Okay, as the American, at least token American, I think there are a couple of things to, oh, actually, no, one sentence. Okay. Pfizer has grabbed people's attentions in the US. There is no doubt that there is some momentum for tax reform. I think things like Pfizer will drive that momentum. I think at some stage there will be tax reform. But also bear in mind, the US is actually very involved in the BEPS project on all of the items. It may have different views to other countries, but I can assure you other countries have different views amongst themselves. So I wouldn't write off the US, and I wouldn't write them off in relation to BEPS.
Okay, well, go on then.
Yeah, I can't, because
a sentence.
There's also one sentence. There's also a number of action where you actually think about it. You wouldn't necessarily need primary legislation.
Okay, well, look, time is against us, I'm afraid, and I have three tasks to do. First, can I, on behalf of the organisers of this conference, that's the Chartered Institute of Taxation, the City of London Corporation, the Law Society, and the Worshipful Company of Tax Advisors, thank all of you for being here and for your contributions throughout the day. Secondly, can I ask you to join me in the usual way of thanking our very, very skilled panel for their contribution this afternoon. Thirdly, I do hope that as many of you as possible are going to be able to stay behind and join us for the drinks reception in a few moments. And can I, on behalf of the organisers, thank Vincent Masons for sponsoring that drinks reception. My final task is to introduce our final speaker, Stephen Coldclough, who is, I think, President of the Chartered Institute of Taxation and, to my knowledge, the man with the most letters behind his name. Stephen.